let's talk about Coinbase and let's talk about a lot of money. So Coinbase is planning on selling up to $1.5 billion of debt through a private offering. The notes would be due in 2028 and 2031, which is crazy to think that that is almost his entire lifespan of crypto so far has been about 12 years. And these notes wouldn't be due for like a decade and then another decade past that. Actually, just like 15 years, yeah, total. So that's pretty wild to think. Anyways, aside, these notes would just allow Coinbase to leverage money to be able to acquire other firms or kind of expand their operations. Coinbase, of course, is kind of moving into that neobank position where they're able to offer lending accounts and borrowing and interest rates with cryptocurrencies themselves. That kind of happens around the stablecoin USDC, which they are right now in some sort of like food fight with the SEC about. So interesting to see them kind of using the public markets to leverage debt in a similar way that MicroStrategy did so to buy a bunch of Bitcoins. And I'd expect to see this continue with other firms going down the line. Zach, I want to throw this to you, get your thoughts on $1.5 billion of debt equity for Coinbase.
Yeah, it's a big number. Coinbase, big company, big ambitions. Yeah, I think the timeline, that's what stood out to me as well, right? I mean, they're playing this for the long game. And if this is a way to do that, then, hey, they're going to do that. I would love to see who they acquire with some of these funds, as you allude to. Really curious to see what sort of late stage Coinbase ultimately ends up looking like as they enter their next chapter of being a big publicly listed company that isn't technically headquartered anywhere, according to SEC documents. So interesting to see what materializes and what their play is in terms of new product offerings. But yeah, that's pretty much what I got. I mean, Naomi, I'm going to kick this to you. Is there any like analog here to like what MicroStrategy has done around their various ways to sell debt? Do you see any similarities there? Or is it totally different?
Probably similarities there, but I've always considered Coinbase to be kind of a Bitcoin proxy stock just because of their business. What's interesting is what they say they're going to be using this money towards. So they're going to be use it to invest in product development, in future acquisitions of other companies or technologies. Like I'm always interested in what Coinbase is going to do because they've just played such a smart game so far. But the only and it's a giant question mark, if we're being honest, that hangs above it is what's going to happen with the SEC, because really they are at the beginning of what could be a major battle. They've, come out very publicly and said, basically, we're going to fight this. In not so many words, but they've been very public about how there's confusion around this. They don't believe that they're offering any securities. They don't believe that the process of lending money is considered a security. And so it's just very interesting to think about how this is going to play out when we're talking about like late stage Coinbase, what that's going to look like. It could go in any direction, right? The government has the ability to really shut down a lot of the things that they might want to go into. If they're looking into all of these innovative new financial products they're wanting to develop in that area, I mean, SEC's ruling could really curtail that. So I hope that that's not the case. Coinbase, as we said, it also has a lot of resources behind it to fight the SEC. What I predict is probably going to happen instead is that there'll be a fight, but there won't be any sort of clear precedent set because it'll all be settled behind closed doors. It'll just cost Coinbase a whole bunch of money that they could have been putting into investing in innovative new products. And instead it's going to go to lawyers' fees and all of that, which is always the process when you have these dumb battles. But, a good case scenario outcome of this would be that maybe we get some precedent and Coinbase is able to really fight this on behalf of the crypto space, being one of those kind of foundational strong points of crypto. But I'll throw it back to you, Will.
Yeah, the interesting takeaway from me from this is that, $1.5 billion is nothing to blink at. And we were supposed to have cryptocurrency as sort of the way to cut out middlemen. And yet here we have like a new entrenched player in the middle of all this. Like Coinbase is leveraging all that debt because they have the expectation that they will be able to pay it off via the cash flows they get from their business model, which is cash flows from people using their services to transfer money around or purchase crypto assets themselves. So like they're extracting all that money from their customers, which those customers obviously think it's good it's in their interest to use Coinbase. But at the same time, like that wasn't really in the ethos of cryptocurrency at all. And even Coinbase in its S1 said that like decentralized finance is very much so a threat to their business model. And yet here we have them trying to get $1.5 billion with the expectation they can pay it off using their centralized venue going forward. Zach, I'll throw it back to you.
Yeah, I mean, that's the big question to me is like, what's Coinbase? What is Coinbase's DeFi strategy, right? Like, what is the Binance Smart Chain of
Mm-hmm.
Coinbase? And I think if if the SEC is kicking the tires on this Lend product that is seeking to match existing products already in the marketplace, that might be a significant hurdle to jump over as they become a bigger and bigger entity in the space with a bigger and bigger target on their back. So super duper interesting. I wonder. I mean, Coinbase Ventures has been active in the space across DeFi and has a lot of investments. I'd be curious to see sort of who comes into the mothership and what their play looks like going forward. Jen, what do you got?
Well, everyone has kind of addressed my question, but we're talking 7 to 10 years from now. We don't know what's going to happen in the regulatory space. We don't know what's going to happen with the centralized exchange should Coinbase stay centralized. And so is this not risky for firms that provide debt? Like, is that a concern that they should be thinking of?
Well, without big risk, you can't get big reward, Jen. So yes,
Okay.
huge
All right.
risk.
Okay.
But I think equally as interesting upside on this, if Coinbase continues to be a leader in this field, if they continue to have really smart people developing products, if they go down the DEX route and they're making a ton of money that way, I mean, there's a lot of ways that consumers could be very happy with taking a gamble on that. But obviously, a big risk, people will have to figure out their own risk profile for something like that. And maybe they're better off just betting on an actual crypto asset itself. But Zach, I'll throw it back to you.
Yeah, I mean, Jen, good question. To your point, I don't believe press releases anymore. Today is not the day for press releases, but I saw a press release from S&P Global that had already assigned Coinbase double B plus junk rating, I think, on the new offering. But hey, we'll get to the bottom of that one as well.